Welcome back to the channel, everyone. Today I want to talk about Ken Griffin sending us a message. And I also want to talk about some new signs that the squeeze is coming and that it may be closer than we all think. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, billionaire Ken Griffin just outbid a group of crypto investors for a rare copy of the US Constitution. So obviously Ken bought a rare copy of the US Constitution for $43 million US, outbidding a group of cryptocurrency investors in a record-setting auction on Thursday. The extremely rare first edition copy of the Constitution sold for more than double its $20 million high estimate, setting a world auction record for any printed document. The hedge fund billionaire was narrowly underbid by Constitution DAO, a group of more than 17,000 crypto investors who raised $40 million in an effort to purchase the document. So Constitution DAO would have won the auction with their $40 million bid, which was double the expected high-end estimate. But obviously Ken Griffin swooped in and outbid even Constitution DAO. Ken Griffin doesn't even intend to display the Constitution in one of his many homes. He pretty much intends to donate it to a museum in Arkansas. And Ken Griffin actually said in a statement that the US Constitution is a sacred document that enshrines the rights of every American. And that is why I intend to ensure that this copy of our Constitution will be available for all Americans and visitors to view and appreciate in our museums and other public spaces. MooMoo are currently holding their biggest promotion, giving away 5 free stocks worth up to $3,500 each, and also a share of NEO valued around $40. I wanted to break down how you can get each and every one of these shares. So when you sign up for MooMoo, you get your first free stock valued up to $3,500. And when you make any deposit or you deposit any amount, you get that second free stock also valued up to $3,500. If you deposit $100, then you also get that share of NEO valued around $40. And if you deposit $2,000, then you get the final 3 shares, all valued up to $3,500 each. So that's potentially 5 free shares of Amazon that you could get just for signing up with MooMoo and making your first deposit. Linked in the description below. But as Katniss says on Twitter, this is a stain on the history of this document. Absolutely unreal. This was an act of mockery. He did this to let us all know that he can do whatever he wants. He believes he's above the law, and he's taking a stand against retail investors to firmly support that notion. And actually CNBC said pretty much exactly that towards the end of this video, which I'll play for you now.
Unfortunately, I don't have an extra $43 million to put towards this. It was none other than Ken Griffin, who is the founder of Citadel. He has won this $43 million first edition copy of the U.S. Constitution that was from the Sotheby's auction that took place yesterday. What he plans to do with it? Well, he plans to lend it to an Arkansas art museum for public display. What's remarkable about this, of course, is that it is the last remaining first edition Constitution that now is in private hands, although, as I mentioned, he intends to allow it for public display at an art museum. So mystery solved. It is Ken Griffin who won this first edition copy of the U.S. Constitution, paying $43 million for it.
Leslie, I have a more important question for you. Do we know which of his $100 million properties this will go in? Will the New York apartment, the Palm Beach mansion, the Chicago penthouse?
Public display.
Where?
In Arkansas, an Arkansas art museum. So as long as you can hop a plane to Arkansas, you too can view this.
I think he just wanted to outbid the crypto
prove a
crowd,
point.
You know, as Mike Santoli says, trolling the trolls and aping the apes, right, Leslie?
I think that is what makes this such a remarkable story, of course, given all the events that transpired earlier this year. But, mystery solved. It's Ken Griffin who ultimately prevailed here.
So even CNBC said exactly that. Ken Griffin is just aping the apes, and he's basically just trying to prove a point. Ken obviously had no intention of buying this to display it in one of his many homes. He's effectively just doing it just solely to outbid the group of crypto investors. But another interesting theory is that he could once again be trying to control the Google narrative. Now, if you search, say, Ken Griffin Crypto, Ken Griffin Law, Ken Griffin Legal, anything to do with that, I'm sure you're probably going to be met with tons of results for this news story. Rather than obviously Ken Griffin lying under oath, you're now going to be finding Ken Griffin buying a copy of the Constitution. So it may just be another attempt by Ken Griffin to try to control the Google narrative around his name. But I also wanted to talk about some signs that the squeeze may be closer than we first thought. Based on this tweet, somebody just sold a massive amount of calls. The last time they did this was the Friday before the week we ran, but this does not guarantee a run since we only have one other instance to go off. But they do this to hide the short interest in the options before a run to make it look like they're covering. So this tweet firstly takes us to somebody selling $16.7 million of AMC call options, followed by $34.5 million and $17.8 million of AMC calls. Bobby starts by saying an absolute massive bearish bet went through AMC today, but obviously that guy Astro commented in saying, nope, I think this is somebody tucking away some short interest. Robbie wasn't quite sure how that worked, so he did a bit of searching and a bit of Googling and answered his own question. This memo contains a dozen pages of highly technical language, but here's a quick rundown. If short sellers are facing a squeeze because shares are hard to buy, or scrutiny for holding in a illegal short position, they can create an appearance of having closed their short position through the use of deceptive option trades. A hedge fund that is short a stock can write call options on that stock, meaning they're now short the call options, having sold the call options to someone else, typically a market maker, and simultaneously buying shares against those call options. The shares bought against the call options could be synthetic longs, meaning they're not part of the original share float of the stock, as sold to the hedge fund by the market maker that takes the other side of the options trade. So a hedge fund starts by selling call options or shorting the calls, and then buys some synthetic shares that have been created for them by the market maker. This works because if a market maker buys options from an options writer, the market maker has legal privileges to do a version of naked shorting or creating those synthetic shares as part of their hedging function. This is necessary under the current rules and the current system for market makers to protect themselves when facilitating options trades. As a result of the above transaction, the hedge fund that sold calls was able to buy synthetic long shares against those calls. The synthetic long shares are the other side of the naked shorts, legally initiated by the market maker so the market maker can hedge. The hedge fund that bought the shares can now report that they've bought back their short position by buying long shares, although obviously those long shares are just synthetics. Except obviously they haven't closed out at all. The synthetic shares they bought are cancelled out against the short call position they initiated, a necessity of the manoeuvre by way of the market maker's hedging of the call position they bought from the hedge fund. So the nearly $60 million of call options that were just sold could be a hedge fund trying to cover up their short position. And therefore this could mean that the squeeze ends up playing out next week or the week after, because the hedge funds are now trying to hide their short positions. As Robert says, based on GameStop in January, the $76 to $150 region is the range where they lost control or where the hedgies lost control, and the price shot into this area quickly. I've also said many times on this channel that I think the $100 to $200 region is going to be the area where the shorts lose control and the short squeeze starts. I also think the fourth quarter is going to be brilliant for AMC because there's so many quality movies coming up. Obviously Ghostbusters Afterlife is just being released as we speak. We've also got Matrix Resurrection just around the corner. We've also got the new Spider-Man No Way Home and many, many more films as well. I think the fourth quarter could even potentially outdo the third quarter for AMC in terms of revenue and cash flows. I also want to talk about GameStop as they believe the MOAS is there for GameStop now. MOAS is here. GameStop tweets at market close, something big just happened, and could potentially be announcing the NFT dividend, the GameStop NFT dividend, 10 days prior to record date per regulations. 10 days from the Friday just been is Cyber Monday. The SEC's new reporting requirements will parallel the mother of all short squeezes with transparency during shorts forced closure. The poster says we had quite a few interesting things happen on Friday. We had the highest increase in price per volume ever, and no news to justify it. GameStop also tweeted announcing something big has happened. The SEC adjusting reporting requirements, and all NFT related job postings from the GameStop website were removed. He said, I've got no proof, but I think GameStop just announced their NFT dividend to brokers on Friday, a minimum of 10 days prior to record date, which could be Cyber Monday. Shareholders can be notified as late as 10 minutes before record date. I believe an announcement of the NFT marketplace, the transformation of GameStop and the NFT dividend will be made on or shortly after November 23rd, when Ryan Cohen's gag order is also lifted. And therefore this could be the beginning of the end for GameStop, and I also think that AMC will be following shortly after. Because also don't forget, many of the institutions shorting AMC are also shorting GameStop. So if they get squeezed in a GameStop squeeze, then AMC will squeeze as well. And now I also want to talk about Deutsche Bank seeing the Robinhood stock slide getting even worse. A Deutsche Bank analyst issues a sell idea on Robinhood, favoured by day traders. Robinhood is obviously down 59% from its peak, hitting a string of fresh lows. The analyst says that Robinhood market shares have already sunk to a record low, and there's still more room to fall. Deutsche's Bedell said the company's prospects may have looked overly optimistic in the midst of the day trading surge. The meme stock phenomenon we witnessed en masse earlier in the year was more applicable to Robinhood's recent customer growth and likely resulted in overestimation of the company's core fundamentals and growth trajectory. So even though AMC hasn't yet squeezed, it's good to see that Vlad's company is basically falling apart at the seams. And I also just wanted to let you all know that Evergrande has been removed from the Hang Seng Index in China, basically removed from China's version of the S&P 500 or the Dow Jones. This is basically preparing for Evergrande's bankruptcy, as it's going to be delisted from the stock market. Guys, be sure to let me know down in the comments below what you think about Ken Griffin sending us a message, and what you think about the squeeze potentially being just around the corner. And if you haven't already, be sure to sign up to MooMoo to get those 5 free stocks valued up to $3,500 each. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.